Stocks slide further. Mid-caps are bearing the brunt as declines are outnumbering the advances by a significant number. Healthcare and PSU banks continue to be the big drags, even as FMCG and utilities eke out gains.
A stronger than expected show by Airtel Africa boosts Bharti Airtel's Q3 performance, but Tata Motors passenger vehicles Q3 is marred by the disruption at JLR following a cyber attack.
The stellar quarter from Nykaa, revenues growing above 20% for the 13th straight quarter, margins at the highest ever. The beauty segment is the key driver, but losses in fashion has also narrowed.
RBI keeps interest rates and its stance unchanged, but ups its expectations for GDP growth and inflation in the first half of FY27. The central bank also eases credit to MSMEs, allows bank lending to REITs, and pledges safeguards and compensation for digital transactions.
And silver slumps to nearly $64 an ounce, wiping out over 40% of its value from the peak before staging a bit of a recovery. Gold prices also take a knock, but the other big sell-off is seen in cryptocurrencies, with Bitcoin halving from its peak in October. Good afternoon. You're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios for the final time in what has been a never-ending week. I'm Hormaz Patakia, with me, Dharandati Ramanan. Dharandati, good afternoon.
Good afternoon, Hormaz. I'm celebrating it's Friday, but the monetary policy has come in. Rates have been unchanged, stance unchanged, but the markets all in the red.
The markets are in the red, and if you are an optimist, you would say that you are better off than what you were at the start of the session. And especially considering what the US futures were doing earlier in the day, they have been extremely volatile as well. The recovery that came in at noon has been sold into, and the banks are the ones that are doing that. ITC, of course, trying to hold fort at one end. Of course, that too has come off slightly from the highs of the day. And it's seeing a bit of a recovery as well. So holding on to gains of around 5% is ITC. But the others, the banks, are the ones that we need to talk about. But 25,540 is where the index currently stands. It's very close to that psychological support of 25,500. Of course, we'll end the week higher, but the bulls will be disappointed, especially because you are now, around 800 points off Wednesday's high.
Absolutely. And, just to point out, Hormaz, it's like a two-way market, right? We've got the FMCG stocks that are supporting on the upside. We've got ITC that's gaining 5%. We've got, HUL as well, which is also gaining in trade. But on the downside, we've got all of those IT stocks, right? There's no respite for them. The index still in the red, 1.8% lower. Persistent Systems, Coforge, LTI Mindtree, all falling between 2 and 3%. The top story this evening, the Reserve Bank of India's Monetary Policy Committee has decided to keep the repo rate unchanged at 5.25%. The RBI also revised the expectations on GDP growth and inflation going ahead. Take a look.
The revised outlook for CPI inflation in Q1 and Q2 of next year at 4% and 4.2%, respectively, revised slightly upwards, continues to be benign and near the inflation target. The Indian economy continues on a steady improving trajectory, with real GDP poised to register significant higher growth of 7.4% this year as compared to the previous year. Amidst global headwinds, private consumption and fixed investment both supported growth. Net external demand, however, remained a drag, with imports outpacing exports. On the supply side, growth in real GVA on the back of a strong contribution from the services sector and revival in manufacturing activity is estimated at 7.3% this year. Going forward, economic activity is expected to hold up well in the next year.
That was policy, but the one stock that was contributing to the Nifty recovery, still holding on to gains, is ITC. And along with ITC, Godfrey Phillips has also zoomed higher. And Godfrey Phillips, in fact, is seeing double-digit gains. It's up almost 11%. And that higher-priced cigarette packets have now been introduced, is what sources are telling us. Mangalam is here with more on this. Mangalam.
Well, ITC is the top Nifty gainer, and Godfrey Phillips too is gaining in double digits, as we understand that, the higher price cigarette packs have now been introduced in the market. Remember, on Jan 1 itself, when there was a government notification that came in of 40% GST and substantially higher excise duty on tobacco with effect from Feb 1st, had these stocks under pressure all of January. The street was, expecting a price hike to the tune of around 15 to 30%, in some cases even 40% to come by for the companies to mitigate the impact of this higher tax. However, the street was awaiting any sort of clarity that came by post-budget as well, and there were no tweaks. So which is why now the companies have gone ahead and introduced these higher priced variants to their supply chain. In fact, I was, accessing some of the products coming in from a few of the companies. So Godfrey's 97mm pack now is at 300 rupees versus 240 rupees a pack. 25% hike is what it is. And CNBC-TV18 has reached out to the companies as well. We are awaiting their detailed response on the quantum, the nature, and the structure of the price hike. But the price hikes have been taken. These stocks are flying on the back of that. Though, two important things to note. Will there be a volume hit because of these higher prices? And do these higher prices cover the entire extent of the tax hike or not? Because if they don't, then there could be a margin hit to these companies' next few quarters' earnings as well.
All right, Mangalam, many thanks for those details. Now, a lot of stocks are buzzing on the back of their third quarter numbers. Ria is here with all of those details. Ria?
Well, yes, let's start off with data patterns first. The revenue has gone up by roughly 48% on a year-on-year basis to 173 crores, and this is versus an estimate of 32% growth. Margins have also come in very strong at 46.5% versus estimates of 38%. So a good performance overall for the company. Hitachi Energy as well reporting a good set of numbers. Revenue has gone up by roughly 28.5% compared to the previous year. Margins have also expanded quite significantly, coming in at 16.6% versus just 10.3% in Q3 of last year. For Nykaa, they have reported a net profit of roughly 66 crores this time around versus just 26 crores in Q3 of last year. So there's a big jump on the net profit front. Revenue has also increased by roughly 27% compared to the previous year. For Astral, the net profit has gone down by roughly 5.5%, but revenue has seen a fair amount of growth at 10.3% compared to the previous year. Volumes in the plumbing business have also seen healthy growth at 16.8%. For NCC, the net profit has declined by almost 37% compared to the previous year. Even the revenue has gone down by 9%, and in fact the company has also withdrawn its revenue and margin guidance for the full year FY26, and the stock is taking a hit in today's trading session on the back of that. For Mazgaon Dock, net profit has gone up by roughly 9% on a year-on-year basis. Revenue has also seen healthy growth of roughly 15% compared to the previous year. For Keynes Technology, net profit has come in well below estimates at 77 crores. Revenue also below estimates at 804 crores, and the FY26 revenue guidance has also been cut to roughly 4,100 crores from the earlier guidance of 4,400 crores, and the stock is resultantly down in trade today. Physicswallah has also reported its Q3 numbers, net profit going up by roughly 10% on a year-on-year basis, and the revenue has also seen an increase of almost 34%.
Ria, thank you for that update. There are a couple of more stocks just before we take that break. Two divergent moves. One of them is Jubilant Pharmova. Numbers came out just a few minutes ago. That stock is down after the numbers were out. And the other one being MRF. And Jubilant Pharmova has actually recovered from the lows of the day. You get more details on this in just a bit. But look at MRF. That stock has zoomed ahead now, 7% higher on the stock. In fact, 8% higher. And after a very, very strong operating performance in the quarter, EBITDA was up 68% from last year. Margins have expanded to 17% as well. And good going for MRF. Take a short break, but just as we do that, here's a quick sneak peek into the stocks that we will be addressing on your stocks in just a few minutes from now today, where you will get fundamental and technical experts giving you advice on the most talked about name this time around, Keynes Technologies. Of course, you have views on Delivery, Tata Tech, Cyient, DLM, and a lot others just in a few minutes from now, starting 2 p.m. only on CNBC-TV18.
Welcome back. You're still with us on Business Lunch. Sources tell CNBC-TV18 that the India-US trade deal is unlikely to have any adverse impact on India's farm sector. Abhimanyu joins us now for more on this. Abhimanyu?
Government sources have indicated that the India-US trade deal will not have any adverse impact on Indian farmers since several commodities have been excluded from the ambit of the deal, which include wheat, rice, soya, corn, sugar and dairy. Also, government sources had indicated that India has committed to buying items from the US which are already imported from other nations, and India imports products like oil, gas, aircraft, laptops, smartphones and goods for data centers. India currently imports around $300 billion worth of products annually, which will now be sourced from the US as well. India expects to hit $500 billion worth of imports from the US in the next 5 years. It remains to be seen how early this growth is going to be achieved. Also, the Commerce Ministry has indicated that the first tranche of the BTA between both the sides is already ready, and they are hoping to sign a joint statement in the next few days. Also, a formal agreement is being drafted which will be signed by the mid of March possibly. It has been indicated by the Commerce Ministry that tariff reduction from the American side would take place, would be undertaken via an executive order once the joint statement is signed, whereas India's MFN tariffs, which currently apply to several American products which are imported into India, they would be reduced only when the legal agreement is signed. It remains to be seen how early all these processes are going to take place and how early the deal is going to take shape.
Abhimanyu, thank you for that update there. Take a short break. On the other side, the US job cuts surged the highest level in January on record. More on this after this break. Welcome back. Now, the layoff plans in the US hit their highest in January for any January month since the global financial crisis, while hiring intentions reached their lowest since the same period. Rima is here to tell us more on this. Rima.
January layoffs just hit their highest level since global financial crisis in the US. US employers announced 108,000 plus job cuts just in the month of January, and this is double compared to last year. And if I compare it to December of last year, we're looking at it skyrocketing more than 200%. And this marks the highest January layoff count since 2009 and one of the worst single months since late 2025. The author of the report, this report comes in from Challenger in Grey. Andy, Challenger's take is, generally, we see a high number of job cuts in the first quarter, but this is a high total for the month of January. It means most of these plans were set at the end of 2025, signaling employers are less than optimistic about the outlook for 2026. And you know what's more alarming? It's not just that 1 lakh plus number in terms of layoffs for January. Hiring intentions also hit an all-time high. Plans are to hire just 5,300 workers. And this is the lowest January total since Challenger began tracking this metric in 2009. Now, where do we see the biggest layoffs? Well, 3 key companies. One is Amazon, UPS, and Dow. And they've announced sizable cuts. For UPS, the number stood at 30,000 as the company shifted towards high-margin healthcare logistics and away from Amazon delivery. Amazon was the other one, 16,000 job cuts. These were largely corporate roles to remove bureaucracy. And then was Dow Inc. They laid off about 4,500 employees, 13% of the workforce, specifically to implement AI-driven automation. But you know what? Overall, it's not just about AI, despite the narratives. AI-related layoffs were just about 7% of the total cut, 7,624. The dominant drivers were contract losses, what we saw in the case of UPS, general market economic uncertainty, and then old-fashioned restructuring, cost control. Layoffs were also attributed to overhiring, organization flattening, the bureaucracy, etc., and not necessarily as an AI replacement. And the sad part is it's not perhaps ended in the month of January, because in February, and this is not a part of the data, but we know in Washington Post, Jeff Bezos has ordered a painful restructuring where he's cut 300 out of the 800 journalists. That's nearly 40% of the newsroom, the metro, sports, book sections were essentially hollowed out. So, you know, this time, I think the take is that it doesn't feel like just disruption. It's also de-risking, because when hiring dries up alongside layoffs, what does it tell you about the confidence in the economy?
All right, Rima, thank you so much for those details. Now, earlier today, we spoke to Ajay Srivastava, the Managing Director of Dimensions Corporate Finance Services, on the tech sell-off globally and how that can impact IT stocks. Srivastava criticized Indian IT companies for their lack of investment in AI and spoke about how that could negatively affect the sector. Take a look.
Indian IT management should be sacked. They have been negligent. They have been like a bureaucrat. They have made money for themselves and given dividends and this thing and invested nothing. Zero. Look at the investment done by Infosys, TCS, Wipro and all is zilch. Look at the dividend they gave to the shareholders and look at TCS. Just think about it. You're an investor. TCS is giving out dividends so the Tata Group can put money in an airline. Just think about it. You could not find reason to invest in TCS, in technology, and gave money out of dividend to invest in airline. Is that something sensible, anybody? So I think we have brought it on our own self. That's the only thing I can say. Nothing global has done to us. We could have done what Anthropic has done. We could have been part of Perplexity. We could have done many other things that's happening in the world. We could have been at the front end of AI. They had the money. They had the money in the bank, zero borrowing. But what did they do? So it's not about IT environment. It's the management of Indian IT companies, which I think is squarely responsible for putting India into such a difficult position.
Candid as always, Ajay Srivastava. We take a leave on this edition of Business Lunch. Just before we do that, don't lose sight of the currency. Even as the markets are recovering, the rupee has now slumped to the lowest point of the day. From Arundhati and me, thank you for watching. Midcap Radar on the other side.